Bloomberg Audio Studios. Podcasts, radio, news.
All right, another stock we're watching today is Norwegian Cruise Lines. It is in the red here. We can see with the rest of the market, Norwegian is falling, but it did put out an earnings report signaling strong cruise demand despite missing profit outlook expectations. Norwegian was one of a few cruise stocks that sank earlier this month as well, following comments from Commerce Secretary Howard Lutnick about a potential tax crackdown on ships that sail under foreign flags. Joining us now is the CEO, Harry Sommer, Norwegian Cruise Lines. Harry, came out with some numbers that looked on the one hand good, but missed maybe outlook expectations. Why don't you run us through the reasons for that first?
So thanks for having us on this morning. Appreciate it. So, we're really happy with our 2024 earnings scorecard. We had 10% yield increases to record numbers. It's a record percent increase, a record total yield. We had record EBITDA. We kept cost growth down to 1%. So like a 900 basis point spread between revenue growth and cost growth is fantastic. We something like tripled our net income from 23 to 24. We reduced our leverage by 2 turns, increased our return on invested capital by 3 turns. So overall, we were really, really excited about our 24 paper, so to speak. Listen, 25 is going to be a little bit different, but we think it returns back to a normal cadence where, like in the back, 3.5% yield growth or 3% yield growth on a half point growth in costs, so about a 300 basis point spread there, right, which we're really excited. Q1 has a couple of technical issues that are dragging it down, related to a few of our big ships going to for some long dry docks. But absent that, we're really happy about the future as well.
Well, in addition to booking and the momentum that you're seeing in bookings, I also want to talk about how much people are actually spending when they're on board. Of course, that's a big way how cruises such as yourself make money. And with this fear that we're seeing over inflation, the concerns that are building about the consumer, do you anticipate that people riding aboard your cruises are going to pull back on their spending once they're actually on the ship?
No, we don't see that. The onboard spend, which we track, as you might imagine, on a weekly basis, was strong both for Q4 and our reported numbers, and continues to be strong throughout January and now February as well. That's the month's almost over. We're very, very pleased. I think within the core demographic that we're getting, which is primarily, upper middle class and upper class guests for our 2 luxury brands, Oceania Cruises and Regent 7 Sea Cruises, they seem to be doing well despite the modest inflationary environment we're seeing today. So we are not seeing any cracks in onboard spend.
I wonder if you factor in any additional tax bills you might receive from the Trump administration. As we noted in the intro, Howard Lutnick was, I guess, unhappy that a lot of cruise liners and oil tankers are sailing around with, low tax Caribbean flags on the back. Most of your fleet is out of the Bahamas. What do you say about that, or what would you do about it? Could you imagine putting more American flags on your boats?
So, I'll start out by saying it's a bit of a misnomer that the cruise industry doesn't pay tax. As an industry, our trade association puts out some statistics. I think as an industry, we pay close to $2.5 billion in taxes on an annual basis to various U.S. jurisdictions. We just pay them in different forms. It's not an income tax, they're port taxes, but essentially it gets to the same thing. It gets to the treasury of local and state and some federal taxes as well. So that's a pretty robust tax bill. Now, of course, the administration may choose to pursue additional taxes on the industry. So it's a relatively complicated situation, as our ships aren't based in the United States for long periods of time. So a little bit difficult to ascertain exactly what our tax bill would be, depending on how they may want to modify the tax code. But I will say, we're generally pleased with some of the other actions of the administration. This pursuit of peace in the Middle East and between Russia and Ukraine, which hopefully comes to fruition over the next few months, would be a major tailwind to us. We have one of our highest yielding itineraries, back in the day, 17, 18, and 19, were cruises that visited Russia, most specifically St. Petersburg. We have about a third of our fleet based in Northern Europe across our 3 brands in the summer. And to the extent that Russia opened up, this could be a significant tailwind to us in order to start visiting St. Petersburg. It was one of our most lucrative and, more importantly, highest rated ports from a guest experience perspective.
That's really interesting, Harry, to hear you say that. I know that your results last year were hurt in particular by the conflict in Israel and specifically in the Red Sea. So talk to us a little bit more about the potential opportunity that you could see, though, in Russia, because, at least listening to your preliminary comments now, it seems like you're saying that is a big opportunity.
Yes, this industry thrives in peaceful environments, as you may imagine. Guests don't want to take vacations in areas of conflict. And I don't mean to state the obvious, but I think it's important to note. And if we can get some relative calm in the situation, especially in Russia, like I said, with 11 of our ships, about a third of our fleet based up there, we can certainly make some, it starts with the guest experience. If we can provide guests with a even better experience than they get today, we can generate additional revenue and therefore profit. The Middle East is a little bit more complicated because there's a little bit more of a long lead time. There's slightly more exotic cruises that go to that part of the world. But assuming things continue to calm down in that region, we think there could be a tailwind for our 2027 results. So I think both those areas are key, and we're again, very pleased with the work that the administration is doing in those areas.
So I know it's early and, you're thinking about this as maybe a 2027 story, but is there any range of numbers that you could put to that opportunity?
It's really hard to tell. It depends when it happens, how far in advance. But, with 11 ships in that Northern Europe region, even a $10 or $20 per diem impact on those cruises could be significant. But because that was the type of impact we got back in 17 to 19 on a positive basis. So it could be meaningful to the bottom line.
All right, Harry, really appreciate you taking the time to speak with us today after what I'm sure is a very busy morning. Our thanks to Harry Sommer of Norwegian Cruise Lines.